it is a huge relationship business on transportation.
You're listening to the BulkLoads podcast, your number one resource in everything bulk freight trucking. And this is episode 215. Hey guys, Jared Flynn with the BulkLoads podcast. Got Tyler in the studio with me here.
How's it going?
Good. Tyler, the tip I want to give this week, we have finally got the invoicing pushed out through the TMS.
Yes.
And if you're not a TMS user, you need to be. It was probably one of the last and final finishing touches to really make this an end-to-end solution.
Yeah.
And when I say that now, we have everything from the starting spot to actually putting in the loads, managing the loads, tracking the loads. But now you can invoice it all out. So now you don't have to use extra programs or outside programs. You can manage everything you need to do in your business all through bulk TMS.
Yeah, and we had a lot of companies. Whenever we first rolled out TMS, it didn't have invoicing. You know, they were like, man, we'd love to use this system only if it had invoicing.
Yep.
Now that we're adding that piece, it completes the cycle. These companies are hopping back on and they're switching over from their current TMS to bulk TMS because we have the invoicing piece now.
And this took months.
Yes. A lot of work, a lot
hours
of testing.
of development,
yes.
And tons of testing, because when you're talking about invoicing and money, you have to get it right.
Yep.
There's no room for error, and we are super excited. So if you are a bulk TMS user, you should see it now. If you don't know what we're talking about and you want better technology, better solutions to manage your business, contact us. Bulk TMS. You can go to bulktms.com. There's a link on the BulkLoads website. We are so excited about it. We talk about this because the guest we bring on today, he actually mentioned how well, because of this feature and invoicing that we have now, they use. Today we're going to bring on Jeremy Mullen. He is with Northern Ag.
Yep.
And he is going to talk about, he's on the fertilizer side. So if you don't know Northern Ag, they kind of have two different divisions. They have the actual trading piece where they're actually they're merchandising fertilizer and selling that. Then they have the transportation piece. Jeremy works more on the merchandising side, actually buying and selling the fertilizer products. I've known Jeremy for a while, got to meet him several years back when he was with prior company Gavilon, and got to actually go down to their facilities in Catoosa, and they had kind of it was a customer appreciation, and really got to meet him there. So a good friend of mine, but he's going to come on and talk about the state of fertilizer and what's going on in the process. And we had, if you remember a couple episodes back, we had Steve Morgan on.
Yep.
He talked about fertilizer. Man, it's a tough one to understand, I guess, in my opinion.
Yeah, there's a lot that goes into it.
And Steve talked about certain angles of it. Jeremy's going to even talk about different angles and kind of why, where we're at today. But if you think about it in the broad sense, and we'll talk about this on the show, you know, fertilizer and grain, you kind of got two different flows. We have all this fertilizer. A lot of it gets imported in from other countries, comes up through all of our channels and comes into retail markets and then out to our farmers, and then vice versa. Then you have corn that goes back the other way.
Yep.
So we're sending corn out and bringing the inputs in and fertilizer, and Jeremy works on that side. So it's interesting, the correlation of how that has. And we know a lot of our bulk haulers, a lot of our grain and feed haulers, they use fertilizer to complement their business. A lot of them use it sometimes in the seasonality for reloads. I don't want to coin the term backhaul, but they use it to fill in those gaps.
Yep.
But then we also have people that's where their main business is. They do primarily fertilizer harvesting, or hauling, and then they use grain as the backside. So super excited about this podcast. And with that said, here's my conversation with Jeremy Mullen. Jeremy, thanks for coming on.
Yeah, thanks for having me, Jared. It's not a big podcast listener, so my first time certainly participating, and happy to be here. I appreciate it.
Yeah, well, we're going to make you a podcast listener, and especially a BulkLoads podcast listener. So, thanks for coming on. You are in the fertilizer market, and that's going to be our main topic of discussion today. Actually, this works perfect. We recently had a guest on that really talked about the grain industry and what's been happening over the past few months, and what we're going to be projected on seeing here in the future. But I think this is going to work well because we're going to talk about fertilizer now, and you kind of bundle this up, and then with freight, and man, we got a full picture of what we're seeing in the market. Before we get into that, Jeremy, man, I want to just hear a little bit about your story because you've been in the industry for a little bit. You've been with a couple different companies, but yeah, talk us kind of how you got started in the industry. You don't have to give us the specifics, but kind of where you are today.
Yeah, I appreciate it. It's funny you ask that. Whenever people ask me how I got into it, the first thing I usually say is, oh, I found out about selling fertilizer when I was like 8 or 9 years old, and the rest is history. It was my passion ever since, and I just had to get into it. But in all seriousness, and maybe it's not sexy or very interesting, but I wanted a sales job when I graduated college. I went to the University of Iowa, so a lot of folks that go there either moved to Chicago or to Des Moines. I'm from Des Moines. I didn't want to move to Chicago, so I decided I want to move to Kansas City. The job at Gavilon is where I used to be.
Yeah.
Was one job I interviewed for, and I really didn't know what I was getting into at all. I'm from Iowa, but didn't have an ag background growing up. And so it worked out. Found my sales job in Kansas City, and the rest is kind of history. So that's how I got into it, and been very fortunate experience ever since. I'm very proud and blessed to be in the ag industry with all the great people that are in it, like yourself, and really just enjoy the hustle, of everybody that's participating in the industry. Some days are a lot easier than others, and sometimes you're just beating your head against the wall. But keeping your emotions, in check is probably the most important, yet also the most challenging piece of the whole puzzle there. So
What I
I
love
don't know if that
about
answers your question, but
yeah, no, absolutely. What I love about this industry, though, especially from what I get to experience, I get to talk with grain merchandisers, feed ingredient merchandisers, fertilizer, commodity traders. But I get to deal with all of these. Commodities are commodities, but there's some differences. Some of them kind of compete against each other, and some kind of complement each other. And I think we're going to get into that a little bit. But kind of talk. You've always just dabbled with fertilizer. I shouldn't say dabbled, but your focus has always been on fertilizer. You've never really done any grain trading or other commodity trading, correct?
Correct. Yeah, just fertilizer. And you didn't ask me directly, but whenever I'm explaining, the difference of fertilizer to grain or feed, and your other kind of common ag commodities, I think if you think about the supply chain and the market participants on grain versus fertilizer, they're completely inverted.
Mm-hmm.
Because on grain, you have, millions of farmers across the US producing their crop. And then that gets marketed to, smaller entity at your local level, which is a co-op, or maybe there's a independent elevator, or maybe you're selling direct to, one of the bigger players in Kansas City. And then it goes down to the supply chain to a bigger player. Maybe it gets put in their bin so that they can rail it or put it on barges to be exported. And so you go from, the masses, millions of farmers down the chain to the smaller number of players, but much greater in size. Fertilizer is obviously just the opposite, where your input producers, which is the fertilizer itself, they're very few and far between. You could probably across the world producing macro fertilizers. I bet there's less than 100 if I had to just throw a dart against the wall, and maybe far less than that. And then, from there it goes to distribution, or maybe it's sold producer direct, and then to a retailer, which is, a greater number of participants, and then of course to the farmer. So the amount of control that, when you have less competition and less participants, I think there's more control over how the market ebbs and flows, versus in the grain market, there's really very little control, especially by the farmer, and we hear that a lot. They have to sell wholesale, but buy retail for their inputs.
Yeah, I've never thought about that way, but yeah, it's a backwards. I look at this funnel two different ways. You have this grain, this big wide funnel going down, and fertilizers. It's a small funnel going out. I've never thought about that, but yeah, from the inputs to the grain, that's interesting how it complements each other. Let's speak a little bit. We're going to get into Northern Ag, but there's times where these flows match up, and there's times where these flows don't match up. When I worked at Bartlett Grain years ago, we'd always try to match up those grain flows to fertilizer. It seems like sometimes it works, sometimes it didn't. Talk about your experience on that and how maybe you did that even when you worked at Gavilon, because I know that you had the fertilizer department, the grain feed ingredients, maybe even how you guys are doing that today at Northern Ag.
Yeah, this is another good question, and one that over my career we've talked about a ton, and it always seems to kind of hit a wall at some point. When I did start at my former company, if you go back to when they were DeBruce, because I started in the old DeBruce office.
Yeah.
That was the whole, from when they started in Paul's garage, just started with grain, and then the whole thing was hustling the trucks. And so then they were hustling these trucks to these feedlots in West Texas. And this is just my understanding. I never actually worked there when they, started the fertilizer group, but they're hustling these trucks for grain and feed into West Texas. And then the trucks were asking if they had anything to bring them out of there because you're in this empty hole. Well, the big thing was Carlsbad, New Mexico is historically potash production.
Yeah.
There is a little bit of potash that comes out of there now, but not as much as it used to. And so then I think from there, or that was one of the reasons they started dabbling in fertilizer. So they were hustling the trucks down there with grain and then bringing potash back out of Carlsbad back into Oklahoma, Kansas, Missouri. And that's just the easiest example, or the one that I heard about the most. But they were really big on the continuity within the groups on, maybe not, hey, I'm paying 50 cents a bushel. What are you paying back on fertilizer? But really trying to work the same, trucking companies, and they wanted the independents and the owner operators, the small guys, and get the relationship factor was really, really stressed and important there. And that was really emphasized too when I came to work there, when it was Gavilon. And we did a little bit of the same thing where we wouldn't necessarily match up saying, I'm paying $30 a ton going north on my fertilizer to the St. Joe market. What are you paying on the feed coming south? But knowing that XYZ trucking company was already hauling the feed ingredients, it kind of naturally progressed where they would want to work with us on fertilizer coming back. So the lanes are, I always ask a truck where they kind of normally find themselves working, are in Houston a lot, are you in St. Louis a lot? Is there a lot of salt going to Lyons, Kansas right now? Just kind of knowing where the trade flows are. But it is a huge relationship business on transportation. And so just getting familiar with where trucks live, where they have a driver that lives somewhere, where their normal runs are, and then what they're looking to match up with. Is the relationship end of it. The non-relationship end is, the phone call from the truck. Hey, I'm stuck in Houston. Do you have anything coming out of there? And that's more kind of more the trading end of it. You get a lot of trucks that may get upset at a rate you show to them. But that's really, it's just commodity trading. I'm trying to get you a load home. I can buy it for X in Tulsa and I can buy it for Y in Houston.
Yep.
And so I can only pay so much to get to the same delivered number that my customer is willing to buy today.
Yeah.
So that's why it has to be that way. Otherwise, I can just bring it out of Tulsa. Or I can bring it out of St. Louis, to make more money at it. So that's kind of, I think, the real world practice of when you're talking to trucks, hey, I'm working on 20 loads. I could either bring them out of St. Louis or I could bring them out of Tulsa. I could pay this out of St. Louis and I could pay this number out of Catoosa. Which would you prefer, or what sounds more attractive to you? And trying to put those trades together, when you're selling a delivered number. So
yeah, a lot of people know my story. I used to work at Bartlett, And when I got hired on, I was behind the wheat desk, but I saw this opportunity to do so much more because there was all these trading groups moving all this truck freight, and it was just like the spider web across the US. And that was one of the roles. And for those that don't know my story, I went in there and said, man, there's a crazy opportunity because nobody's talking to each other in these business segments. The wheat guys
Yes.
weren't talking to the fertilizer guys. Country Elevator wasn't talking to this group. Well, feed ingredients, you name it, all these different groups. And I looked at it and I was like, well, man, let me go and talk and figure out where these moves are. And that's what I essentially did at Bartlett, was saying, hey, if we work this together, we can match this stuff up. And it never, some of it worked out beautiful, some of it didn't, but then it was always trying to figure out, well, who's going to pay more? Or is your line haul more than my line haul?
Yep.
Typically, like you said, the feed ingredients,
Yep.
typically those were already built in and already set up. So you could always kind of figure, hey, this rate's going to be this is what it is. Well, does this fertilizer move work against that move? But laying it out there for that trucker was most important, because you can almost match that up and lay these programs out for them. But it was funny that you said that. Like, even I've always heard the Paul DeBruce story too, that they kind of early on figured out, hey, where was this excess of capacity? Where could they figure out and help these truckers and match this stuff up? So it was just, man, I love that you said that. And it's interesting. We've had a couple podcasts before this, and I welcome if those are listening go back, but like, it's the same story you hear on trying to figure out where these trucks are, what freight, what the rate's going to be to make that work. So that's interesting that you said that. Jeremy, let's speak now about kind of where the market is today, and we might back up a little bit, but tell us kind of, actually we will back up. Talk about what fertilizer's been doing. We've seen these high prices, how that's kind of impacted, changed the market, changed usage. One thing I'm hearing recently, a lot of farmers didn't use a lot of fertilizer because of the high cost. We had a drought year, so some of the crops aren't going to be performing as well because these guys didn't put as much fertilizer on early on. Let's talk on that, but then even transition to kind of what we're going to be seeing coming up this fall, because again, you get a little bit of a fertilizer push in the fall months too. But talk about kind of that, what's happened here this past year, and kind of what we're starting to see develop here in the near future.
Yeah. It's I was at a conference recently, and one of my colleagues from another supply company said, we ought to just take a picture of the last year or two and put it in a frame and hang it on the wall and just like leave it there for forever, because it won't ever happen again. And that's probably the simplest way to put it. But depending on how far you want to rewind the clock, probably right when I started with Northern Ag about 2 years ago, in the 6 years prior in the business, I had seen very little. To see a $20 swing in a product was like, oh my gosh, we were just getting so excited, doing cartwheels over it. And then in the last 2 years, we've seen swings of hundreds of dollars a ton, both up and down, all in that same period of time. So it really started. The biggest domestic phosphate producer in the U.S. here filed basically a trade. I don't know if you'd call it a complaint, but what they were arguing was that the international producers that they compete against with domestically were getting their raw materials subsidized by their governments or by wherever they were producing it. So if it was natural gas, for example, or the raw phosphate rock that goes into producing like MAP or DAP. And so then the U.S. Department of Commerce and International Trade Commission, which is another U.S. entity, looked into that, and they did find that there was injury caused to the domestic producers who are at the will of the free market when it comes to sourcing those inputs, and also all the other things that go into their production costs. And so they were harmed or injured by having to compete against entities that the DOC and the ITC determined were being subsidized and had a lower cost of production that way. So then they were bringing that product in and at a cost of production that was lower than what anybody using inputs sourced on the free market could be. And so that's a lot of information, but basically that inspired some duties to be leveraged on phosphate imports into the US, which really the same amount of phosphates being produced across the world, right? But whenever you have a trade flow shift, like we saw a few years ago with Trump putting tariffs on grain and going into China, or I'm sorry, China put the tariffs on the US grain coming into there in retaliation for the Trump tariffs. The same amount of grain was being produced around the world, but it had just had to move to different places, to and from different places. So that causes the markets to move up. Then last year, yeah, so then if we get into the latter part of 2020 into early 2021, really fertilizer prices were at historic lows in the summer of 2020. And that's on phosphate, potash, nitrogen, all products, all macros. So from the retail level and the farm level, if they were making money or they had money to spend, fertilizer was a good investment. And so we started pulling a lot of demand for it at that time where people wanted to fill their barns full because they felt like there was only, upward appreciation potentially, albeit not as much as we saw. Then we had the countervailing duty investigation on phosphate that pumped phosphate prices up first. When we got into late 2020, early 2021 is when we started seeing the grain market really move up quite a bit on corn and soy. And so that started increasing demand again at the farm level because they had more money to spend. And they wanted to maybe build rates in the soil, put more out there because it was a good investment. Then as grain prices improve, the fertilizer market tends to move up just because, there's more money in the pocket of the farmer. It's the unfortunate truth of the industry and how the input market works. If you look at chemistry and seed as well. Then when you get into the latter part of the spring of 2021, same deal. Cash flow rich at the farm level, needing to put expenses on, and so we saw summer fill programs, which happen every year on your macro ingredients in June and July. They were pulled forward into April and May because the farmers were just clamoring to buy fertilizer inputs. They'd seen this story before back in like 2008, 2009, 2010, 11, 12, where grain prices got really high. So fertilizer prices also started going up and their chemistry again, et cetera. So they want to get ahead of it. So we were already pulling fertilizer demand forward in 2020 just because it was cheap. Now we're pulling it forward because grain prices are going up. Fertilizer prices are still relatively cheap. If you look at what your production costs are versus what your output, what you're going to income. Then we had Hurricane Ida in summer of 2021, which shut down a lot of Gulf Shore, New Orleans production on nitrogen. We actually had force majeure declared on a lot of nitrogen production, which in my career prior to that, I had seen maybe one time in the US. And I think we saw it with 2 or 3 or 4 producers in a more material way just in 2021. And then kind of more recently and going back even into late 2021, some political factors with Belarus. They're one of the world's largest potash producers. They ordered a plane to be landed and they arrested a journalist. So sanctions got to be put on Belarusian potash production in the EU and in the US. So they have 12 million tons of production in a 70 million ton market. So, that's 10% or more than 10%, I guess, of worldwide potash production that basically got landlocked and can't go anywhere. So they're really struggling right now to get their tons out and shortening our supply in the market. And then Russia, the tension between Ukraine and Russia was building late 2021. Natural gas supplies, which is your primary input to nitrogen production and a huge one into phosphate production, started getting curtailed into the European Union. Values went up. So we started seeing nitrogen production being cut down in Europe. And long story short, it kind of brought us to where we are today with all those factors combined, black swan events. I've heard it mentioned on your podcast before, um, talking about fertilizer and still today, um, to, the market conditions. We basically got to start 2022. So we had a really good fall, really strong demand. Again, income's really good at the farm level because they had cheap fertilizer inputs
Mm-hmm.
and really strong grain prices when we got to the harvest 2021. They needed to offset that with the expenses. Retail prices last fall on fertilizer, again, the fertilizer that had been bought in April and May, at the retail level and stuck in a bin, so was a cost of maybe $200 or $300 a ton less than wholesale replacement values in the fall of 2021 when it was actually going to be applied. So the cheapest fertilizer to buy last fall was at the retail level. Those prices lagged the wholesale replacement cost by hundreds of dollars a ton all fall, which I've never seen in my career. It was pretty unprecedented, quite frankly. And so now we get into where we are today. We had a huge fall. This spring, prices were at the huge highs because of the big fall we had. And I think at that point, the farmers just finally got that sticker shot of seeing the replacement values come through to the retail level. So instead of buying $700 or $800 retail ammonia like they did in the fall, it was $1,500 in the spring. Potash that was maybe $450 at the retail level in the fall was now $700 for the spring. Um, and so, yeah, this spring weather, really dry in the western and southwest plains, really wet in Missouri, Iowa, really dry in the Dakotas. I don't cover much, further east than that, so I can't speak to that as well. But combination of Mother Nature and high fertilizer prices really put a damper on demand this spring. So coming into the summer, had a lot of carryover inventory at the retail level and at the wholesale level. That's kind of a lot of prices go off a little bit, but we're still primarily fighting this geopolitical situation in Europe. That's kind of the biggest thing that's making noise today is natural gas prices in the EU, sanctions on Russian production, which um, actually the U.S. has not sanctioned any Russian fertilizer production. Russian tons can come here freely. It's just in Europe where they are not allowing any Russian fertilizer to be traded there. So you're seeing this Russian-friendly kind of market open up with Brazil and Asia and the U.S. And then the non-Russian friendly in Europe. And so again, moving those trade flows around and still keeping prices really, really high. But this fall demand is really uncertain because grain prices have kind of cooled off a little bit. Inputs are still really, really high. Retailers are reflecting again full replacement values of these higher fertilizer prices. So we're kind of coming to this juncture where the retailers really have to position tons to be ready for fall demand, but the farmers are a little bit slower to raise their hands on making those purchasing decisions. So yeah, everything we touched turned to gold, over the last 2 years in the fertilizer markets, and things are really changing in a hurry, and it's getting a lot more challenging. So,
So we see obviously these prices go crazy high, but then at the same time there's supply issues, shortages. For a company like Northern Ag, and I don't need to know the details, but is that a good thing or bad thing? Because it's like, yeah, you got more margin in it. I would assume you're selling at higher levels, but at the same time you're having shortages and stuff like that. Farmers are getting priced out of the market, or it's become a certain price. So is tell us kind of, is that I mean, how does that weather for a company like yours?
right. Yeah, that's a great question. I think a lot of times what I'll say to my customers is, as Northern Ag, we don't have assets, so we're just a trader. So we may take a position out of a terminal or a production point for a forward ship window, and that can be, somewhere months down the road, or I could just buy a few extra loads to have for the next week, if I think I'm going to get some demand. And do that when you're getting a market indication that there may be some reward for doing that, market appreciation. But what I typically will tell my customers is that because of that, I'm just here to make money marketing fertilizer. I am going to, if I feel like I need to buy fertilizer and go long because the market's going to go up, I'm going to pass that information on to you.
Mm-hmm.
And if I'm just in a back-to-back mode where I'm taking the best price I can find, or a price that from a relationship I utilize, extensively, and I put $5 on it and I sell it to them, whether fertilizer is $800 or $200, I'm making the same $5.
Right.
So bottom line is we're primarily kind of a back-to-back trader, leveraging our relationships with just both customers, suppliers, and transportation that we use. So to that end, again, whether it's 800 or 200, I make the same $5. Throughout the industry, as far as strictly on a profitability level, volatility is always what's best, because that's what gives you opportunities to go long and short to make money. Going short a physical commodity is probably a lot more difficult and risky than going long. So as a general rule, volatility is good, but only when you're on the right side of it. Like I said, last 2 years, everything we touched turned to gold.
Yeah.
It's kind of changing now. So risk tolerance is a lot lower. You think about capital, interest rates are going up. You're really not able to take as much of a position if you have the same amount of capital. It buys you a lot less product. And then you also, is making $5 on $1,000 fertilizer really as good as making $5 on $200 fertilizer? Absolutely not. Your return on your investment's way worse. So there's kind of all those factors to weigh up as far as, how you go about trading, but kind of the nuts and bolts of, finding the best deal or the best way to supply your customer with the product they need in the timely manner that they need. And putting a minimal amount of margin on it, still pretty well. That's going to be how we keep the lights on and stay in business over the long term. So
you mentioned earlier, you guys don't have any assets. So a lot of times you're buying this. Talk a little bit about details just on Northern Ag. So you guys are buying this wholesale. You guys are selling it retail, I assume.
Correct.
But kind of, we don't need to know, specific customers, but like talk about just some general freight flows that you see. You guys will buy out of probably Catoosa or the port. You guys will sell Kansas, Iowa, but kind of walk us through some of those scenarios just for truckers that are listening to where some of these opportunities are or will be.
Yeah, no, that's a great question too. When I first started my career, again in the former DeGroote's office, what was cool about that was like they had that back-to-back like cross-country trader mentality. They were really big on cross-country grain trade. So the whole thing with commodity trading, period, is if you can make more money bringing it from 1,000 miles away than you can doing it from 100 miles away, that's what you're going to do. So AMS is a good example of a product that you have a lot of different like production points and supply points to leverage. So
and AMS is ammonium sulfate.
Ammonium sulfate.
Yep.
Yeah. So it's a sulfur in general terms, from what I know about its production, is a byproduct of like oil and gas production. So a lot of domestic production on AMS is in the Gulf Coast out of Houston. So that is something where I could bring it out of Houston. I could bring it out of Catoosa, Inola. I could bring it out of St. Louis. And then you have all these other little smaller wholesale points, maybe along the Missouri River, or if there's a deal on something, up the Illinois River. That's kind of the beauty of working for Northern Ag is coming again from that cross-country trader mentality. You have so many more arbitrage opportunities to sell a delivered number, say into Northwest Missouri, and then figure out what your best play is to cover the sale, using what trucks you have available or where the trucks, are looking for are the hungriest maybe.
So you might be making a sale already to Northwest Missouri, but then you got a spread around Catoosa, St. Louis, the Gulf, whatever. You can have 5 different ports, and then you're just looking at the spread. Hey, what's going to be the best way to get that in there where truckers making money, you're making money, everybody's happy.
Yeah, exactly. Yeah, so I may make a sale, say to Northwest Missouri, on AMS and think I'm going to cover or plan to cover it out of Catoosa, Inola. But then if I get a few trucks hollering at me looking for work out of Houston, I may see what my cost is at Houston. Say, hey, I can pay $60 a ton going to Northwest Missouri out of there, which would be a really cheap rate. But if you're really desperate to get out of there just to get back, and maybe pay for your gas home, then you're willing to take it. And so I'll buy a couple loads there and I'll go long to that end, whatever amount I cover in out of Houston back at Catoosa, Inola, and then I can use that to go somewhere else. So it kind of depends on how those local markets are trading, as you from when you consummate the deal to when you actually go to execute it. The Houston market may stay neutral, maybe it's flat, but if everybody's running out of AMS at Catoosa, Inola, and it becomes more valuable, then you want to hang on to that and maybe use it for an FOB sale there and start covering your delivered sales out of Houston or St. Louis, where those markets have stayed static. So that's kind of what I look at, when I am making sales is, yes, like you said, where can I cover this to either make the most money, or help a truck out if they're needing to move, a certain lane. The key thing though, I say all that, but you can't ever lose focus, or the primary focus still will always remain, keeping your customer needs, as the number one priority. So you can't get too cute, right? Just in the name of making more money. That's not what it's about. You'll take that opportunity if it works for your customer. But if you don't have the customer, willing to buy product from you, then you can't ever have the opportunity to make those trades. So that's first and foremost. And then like things like product quality are important, regardless of the product. And again, exercising relationships. So you want to exercise the supply relationships that have been buttering your bread for the longest. First and foremost too. So.
My name is Chris Neiman with Neiman Trucking out of Dwight, Nebraska. I made the decision to go with the factoring company after having a run-in with a no pay from a customer. I did some digging around and found out that Smart Freight was actually local for me and made a phone call. Customer service was incredible. Their rates were right on, spot on for their factoring fees in order to get paid the next morning with direct deposit. I couldn't really ask for more. Being able to work with them has been the easiest thing that could have ever happened. It's been very simple, very easy, and very quickly taken care of. The whole crew at Smart Freight is hands down the best customer service that you could ask for, especially in this industry. Being able to have a company that stands behind you and understands what you're dealing with and what you're going through has been a pleasure. They take care of me just as much as I take care of my customers. It's been a lot of fun working with Smart Freight.
Yeah. Obviously this is a trucking podcast. Can you speak on how you deal with your core carriers that haul for you? Obviously fertilizer can be a little bit more seasonal. You're not pulling wheat mids out of a feed mill that, same 20 loads every week and they go to these same markets. It's the same truckers over and over. That's different for fertilizer. There's going to be times when the customer needs it and not. Obviously you might be dealing with the same carriers, but it can be kind of a revolving door on who you use depending on when the market is. Obviously, the dynamics change when you got $6 diesel out of certain markets, where the freight alone could change the flows quite a bit. But talk us through how you deal with the relationships with carriers and communication with them, and both from you to them and them to you, to know kind of how those markets evolve and where those opportunities are.
Yeah. Like trading fertilizer is like a football game. Like I'll do my one jab at the Nebraska fans out there. Scott Frost, his offensive coordinator, defensive coordinator, didn't have a special teams coordinator, right? And they lost how many odd games last year? A lot due to special teams. Trading fertilizer is the same way. You got to have your supplier relationships, customer relationships, and your transportation relationships. So it's a 3-stage game, and the transportation is crucial to any trader, commodity trader, and especially fertilizer trader success. A lot of it is, again, over the years, maybe I posted something on BulkLoads 8 or 9 years ago, on a lane that's very regular for me now, and I kind of built up a network of trucks that like doing that on a regular basis. And so over time, you just communicate with them on when you have those loads. That's probably the primary thing is for my core business in Missouri. The trucks I use for it, I'm going to probably call the first, when I get a certain lane, I'm probably going to call the same half a dozen trucks first on that, 90% of the time. If they can't do it, then I have to start kind of keep going down the list A to Z. If it's something I'm unfamiliar with, maybe I can make a good buy on fertilizer, but it's in Illinois where I really don't have a lot of freight experience. I may just post it on BulkLoads just to get an idea for what the freight might be. Or I may buy it, and sell it knowing that I can cover it out of like a Catoosa Inola. But I'll just post it coming out of the other place where I bought a cheaper fertilizer and, say, hey, if I can cover it for this, I'll book the truck with you. And then I can develop a relationship with a truck to maybe continue doing that down the road when the market allows you to. So when it comes, the biggest thing, like you said, with the seasonality of it, and especially in today's freight market, when it was in 2015, 16, you saw a lot of trucks coming out of the woodwork on the bulk hopper side of things because the frac sand just died overnight.
I remember that big time.
And we'd post something on BulkLoads, and we would be getting half a dozen calls, within a minute just on that. And freight rates were really, really getting depressed. So obviously, trucks have been, had kind of gone out of business over time since then. And then, you completely turn things on its head with the commodity markets. Somebody I used to work with says the freight market goes as the commodity market goes. So when commodities were really cheap, in 15, 16, we saw a lot of freight, come onto the market and freight rates went down. Here, 2020, 21, 22, exactly the opposite. We're seeing the truck supply go way, way down. It's a lot more relationship based than it ever has been before. So I've been telling customers, if you know a trucker that you go to church with, or you see at the coffee shop every day, or maybe you sell them inputs for their farm, talk to them, try and leverage that relationship. I know you like to buy delivered, but if you can get one or two guys that can help you out in a pinch, that makes an immense world of difference when it's game time, in the spring. This past spring, going back into December, January, when we were starting to quote prepay business, I was already talking to my key relationship trucks on, hey, can you give me an idea for what the freight might be, in March and April? I know that's a long ways down the road. But give me an idea for it. I'm not going to hold you to it. I understand fuel will change, et cetera. And really, it also is a conversation with my customers. Same thing. If we have to sell them on a delivered basis, but they want to book it in January for shipment in March and April, there's a conversation to be had there. Here's what I think my freight will be. It could be as high as this. It could be as low as that. If you value my service, maybe I'll sell it to you FOB and I'll just put $5 on it. I'll bill you whatever the freight will be. And that's not a blank check, where I can just book it at, whatever my first truck says, the rate's going to be. But it actually gives my customers a little more flexibility too, because if they're wanting it yesterday, then they can tell me, hey, I need to pay whatever it takes to get it here right now. If they can wait a couple, 3 days, then I can say, hey, the market rate's $30 a ton. So that's what the freight's going to be on this. So that way it's a lot more, again, of a relationship between me, the trader, my customer, and the trucking transportation part of it, to all work together to get it done, best for everybody, win. So a lot of the freight moves today it's planning, way more planning than I've ever done before, talking about my trucks about, I might have this, a couple, 3 weeks down the road, or I'm thinking about bringing something from and that I normally wouldn't bring. Can you give me an idea from on the freight on that? Because normally I'd bring it out of Catoosa or Inola. So it's just a lot more planning that gets involved than it ever used to before. Before we just sell stuff, $2 a mile, start selling at 150 a mile. If they don't take it, okay, we'll bump up the rate. If they do, great. Now you can't be that willy-nilly because if you're working for Northern Ag and you're working off $5, you can eat up $5 in truck freight in a hurry.
Yeah.
So you got to be more careful.
Man, I
Yep.
love that. I'm going to go back because I think that's just awesome how you creatively. Well, I'll say this. I can remember the days too. I would ask a trucker, it'd be January, Feb, be like, hey, we're looking at this sale in April. What do you think freight's going to be? Well, is going to move at, $25 a ton. I can't commit, but it was hard to get that commitment. And I can remember that. I'm like, I need you to tell me this because we're going to book this. But it was just tough to always, a lot of times these carriers, and just from the way the industry's always adapted, to get like a firm commitment for me to go back to the traders and say, yeah, get it done at this. But a lot of times we would just say back in the day, yeah, we know confidently, it's going to be $2 a mile, figure that. But I love how in today's age where we, this past year where fuel was just going like this, you couldn't do that because you just didn't know the trucker didn't know where fuel was. You didn't know where fuel was. But if you got the customer to say, hey, if you can just buy this FOB, I'm going to help you. I'm not just going to take the first whatever. I'm going to make sure and get your best rate. But it almost kind of gets like everybody's got skin in the game on that one. It's not a win-lose situation. Somebody's not losing, somebody's winning because the market went the other way. I think, I think that's brilliant, Jeremy.
Well, it's easier said than done too.
You got to convince them that's the right way to do it.
Yeah. Too. Yeah. It might, your competitors may not be pricing that way. I know talking amongst some suppliers going into the spring this year, there was that was something we talked about a lot as kind of an industry. It's just the freight, we had gotten burned all fall long on freight, so sales you thought you were going to be making money on, you were just taking it in the shorts. And that's obviously not a truck's fault or anything. The market is what the market is. But just how do we work around that? Well, customers, they got to market it to the farmer, right? So if they don't have the freight piece locked in on buying it at a delivered price, then their cost is up in the air by potentially a pretty wide margin as well. So it is difficult on all ends of it because they have to go figure out a price to market it to the grower at when we don't know what the freight's going to be. So it's just a conversation. And again, people have to value your service in order for them to maybe want to sign up for that. And they got to trust you, and your truck's got to trust you too, that you'll take care of them and that you'll be able to work together through a situation. So,
yeah, that's good. Well, man, we're getting, wrapping up and getting close on time. And Jeremy, this has been fascinating. You actually put together a list that I've been going through some of this, but man, there's a lot on here that you listed we probably didn't get to. We may have to have you back on to do that. But I guess just for final, I was going through this list. You're talking about this conveyor, the longest conveyor in the world. Talk about that. This is just kind of a fun fact about fertilizer, but I found this fascinating.
Yeah. So Morocco has the world's largest, or the Western Sahara, Morocco has the world's largest phosphate reserves in the world, phosphate rock reserves in the world. And I don't know if it's the second largest, but behind that is in Russia, which I couldn't tell you which part of Russia, and then Tampa, Florida area, which is where most of the phosphate in the U.S. comes from. But yeah, in Morocco, they have a mine where they are transporting, I believe, the phosphate rock, which is your raw material to go into MAP or DAP production, by conveyor, something like what I put on there.
60 miles.
Yeah. So if you're on Google Earth, you can see this conveyor and you can kind of see just on the edge of it, you can see where like the dust of the phosphate, rock has been blown off or over time kind of worn off the belts. Yeah. Can you imagine maintaining that? And the costs that would go into it.
Yeah, I mean, it just sounds unfathomable to think of a conveyor belt running that. I mean, transporting any kind of commodity, but a rock or fertilizer that far. Amazing. I'll have to look that up on Google Earth. So, Jeremy, hey man, thank you so much for coming on the show. This has been awesome, man. You guys have been great supporters of BulkLoads, Bulk TMS. You guys were one of our pioneers that got on Bulk TMS and have used it actively to manage all your freight and trucks. So, man, we are so thankful for that. If you're listening to this and want to know more, we'd love to talk to you about that. I'm sure Jeremy and his team, they can kind of tell you their experience with it. But, man, you guys have really been strong supporters of us. So thank you so much for that, and appreciate you being on the show.
Yeah, thank you, Jared. The only other plug I'd put in real quick for BulkLoads and for Northern Ag, we're having a lot of success. I know Smart Freight is something your trucks using BulkLoads use a lot, but we're having a lot of success with the billing through BulkLoads now that we're using your TMS, where trucks can just take a screenshot of their BOLs, put in the weight, and without using Smart Freight, they can send the bill to us. And avoid, if they can stand away, avoid paying the factoring charge. So that's something that's working really well for Northern Ag. And we encourage all of our trucks to bill us that way. And I think for any of the other TMS users, would probably echo the same. So
yeah. Well, just so you know, if you're listening out there, I did not tell Jeremy to say that on using the app, but again, that's what it's built for. We've realized this digital push, and honestly, how much of a time saver it is for the trucker. He's not having to mail documents. It comes electronically to you all. You guys can process it, bill it out, pay them faster. I mean, it's a win-win.
Correct.
So if you're a company using the TMS, we'll show you. If you're not, we'll show you. If you're a trucker out there and a BulkLoads member, you can use the app anytime. It's ready and available. And if you don't know how, contact us. We have a support team that can walk you through there. It's not going to hurt your brain. It's not going to burn more calories. It's a simple, easy process, and encourage you to check that out. So cool. Well, we are out of time. Hey, Jeremy, thanks again. Appreciate you being on.
Yep. Thank you, Jared.
Tyler, the fertilizer market is very condensed, I guess.
Yep.
There's very few companies out there. And I guess grain has kind of trended the same way. We always talk about the ABCs, but you see it on fertilizer too. There's, like Jeremy said, less than 100 fertilizer producers in the world out there that are supplying fertilizer for some of these big crop growing areas.
Yeah.
So it's a very specific on how this stuff gets moved through the pipeline.
Yeah. One thing Jeremy also touched on is that whenever he was talking about demand, he talked about inputs are high right now, but the fall demand is uncertain. So we don't know what this fall is going to look like as far as fertilizer goes.
I know just from years of being in the business, fertilizer can be a very sensitive one because of the uncertainty, unlike grain and all that. And I can remember even some of these years where you had these high prices and then these fallouts. Well, it's hard to hedge fertilizer. I know it can be done with grain, but I know I've seen companies over the years that have gotten burned because they went or took a long position on that. So that does have a critical role. So we've seen this probably even more than grain. When fertilizer moves hot and heavy, I mean, it's a feast or famine on the trucking side. It's just like, you got to get it moved, and you got to get it moved now. And I think Jeremy explained that very well of kind of how that happens. But then he talked about too, there's been times where, he's got a very close relationship. I think you're going to talk more about this, Tyler. Like, you want to have that close relationship with these truckers, because there's times where, hey, a trade can be made if you know that something's going to be made, that truck's going to be in a certain area.
Yeah. And we've talked about this on other episodes. Just how crucial relationships are for brokers and carriers, kind of how they're on the same side of the field there. And that's what Jeremy mentioned is, if he can give any advice to, maybe a new commodity broker or something, is just remember that, your relationship with that carrier, will make or break your success in the industry.
I found it fascinating, and I never heard this until he discussed that, how he's trying to push more of his clients to actually, buy the product FOB. And then when the time comes, he'll actually schedule the truck because of the uncertainty. He said, some of these times, if you're figuring you're going to be buying fertilizer, moving fertilizer in November, it's so hard to gauge what that cost is going to be. But if you can go ahead and put a price in FOB, and then Jeremy can assist in that. So it's kind of helping take the risk out of both the merchandiser and even the trucker, because you just don't know what the market's going to be. And, we've seen fuel take a, $2 per gallon, up and down range, and it's just hard to measure that. So I love that creative thinking outside of the box, and not doing nothing but actually figuring out ways to still provide excellent service and help in the assistance of transportation.
Yeah.
So awesome. Any final thoughts, Tyler, before we
Yeah,
close out of here?
Jared, you and me we always kind of toy around the idea of videoing these podcasts and these episodes. We've even had a couple guys reach out to us and ask, do you guys video these episodes and where can I find them? Which we haven't done, but we keep getting closer and closer to actually doing it. And I think we're going to start doing it here in the next couple weeks or a couple months to come. I think we're going to start setting up a video camera to start recording these podcasts and putting them on YouTube so these guys can actually sit and watch them as well.
I guess I'm gonna have to dress up now.
Yep.
So, but no, I think it's a good. We're excited to do that. So be on the lookout. We will start. We're actually already putting the links on YouTube for people to listen to. We know a lot of people that's their main source of where they like to go to listen to different episodes, shows, podcasts. So if you follow us on YouTube or go to YouTube, search BulkLoads, and you can find our channel, hit subscribe, and you'll be able to get a list of our podcast links and even other videos. Tyler, you've been working on a couple customer videos that you'll be releasing soon. Those will be on there as well. You get to see who the customers are of BulkLoads, specifically some of these trucking companies that use us, and see a little bit of their stories, which I just love. They're always usually pretty heartwarming, little tug on the heartstrings.
Yep.
Yeah. So cool. Last thing I want to say too, you guys know this. We also still we're hot and heavy with Bulk Insurance Group. Man, it is taking off. We are so excited. I've had people ask me, they're like, well, why did you do that? Well, the main reason we did this, I always want to be very clear, like we wanted to tell a story about our group of carriers. I've said this years ago that we have a group of haulers out there that I think are some of the best trucking individuals and owner operators, because a lot of these, they grew up on a farm. Most have been operating equipment, from the time they were 8, 9, 10 years old, learned how to drive tractors and trucks, so that we have some of the most safest, respected drivers out there. And we want insurance companies to see that, the big carriers that are providing that. So we are telling a story to get better insurance, better coverage, hopefully better prices, more affordability. And we're seeing it right now. We're seeing that, hey, we can actually help these carriers and get better pricing because there's no other agencies out there that specialize in this.
Yeah.
And that's why we started this. We're continuing to fight for the trucking companies and get them the coverage and quotes and pricing that they deserve. Super excited. We have, it's been awesome to see this put together. But again, if you're out there, we know that everyone has to have insurance. I have to have insurance. You have to have insurance. Every trucker out there has to have commercial insurance. Give us a chance. We'd love to give you a chance to quote the business, see if we can help you out. If not, no harm, no foul. But we think that we can be very competitive, and more importantly, we can give you the coverage that you need. Larry Hurt, who is running this, he comes from the industry. He's got so much expertise on this, and he's also a freight guy. He worked in the freight field, so that's one thing too. A lot of other insurance producers, agents, they don't know anything about freight. They know about insurance, and they know a wide range of insurance. Well, Larry knows all about freight, and he's put that into insurance. So, man, he has developed a program I think that will, wow you. I've been super impressed. It's been cool to see what we've been able to do. So again, Bulk Insurance, give us a shout. You can go to bulkinsurancegroup.com, right, Tyler?
Yep.
It's just, there's a little quote form. We can reach you, or just give us a call here in BulkLoads, and we can transfer you over to that department and talk to them. So awesome. Well, thank you as always for listening to the BulkLoads podcast. If you haven't yet, please make sure and hit the subscribe button. God bless.